If we look at the S&P here, we've now had back-to-back weeks of 5% losses. Is that a big deal? Does it matter, right? We lost just over, here, I'll show you. Let's go over here. So, yeah, there you go. We lost 5.05%, and then we lost 5.79%. It's actually kind of rare to see that happen. Visually, if I could just show you on a chart of the S&P where that's happened, the little orange dots in the background there. Oh, maybe next time we go with red. Right, maybe red or green or something a little more obvious. But here is the actual days of those back-to-back drops of 5% or more. So if you're looking back here, there's only 7 other times in history. You got 1974. That was during the Nixon resignation. That was a big deal politically. You got 1987 going into Black Monday there. 1998. If we go over here, this is where Russia defaulted on their debt, but more importantly, long-term capital management. If you've never read the story of long-term capital management, it is where the phrase picking up pennies in front of a steamroller comes into play. Really fascinating story. There are numerous books written about them, but anyways, I didn't mean to get off track there. Long-term capital management there, that's in this 1998 period here. 2002, that's the end of the dot-com bust there. You got 2008 during the financial crisis. You had 2 times over here, and then you had COVID, of course, the last time that's happened. Very rare. What I want you to notice is these aren't just like magically placed to make it look good. These are the exact days that this was placed. Were we near a top or bottom in the market? Maybe a couple years before we hit a top there. We got a bottom here within a few months of a new bottom, almost perfectly at the bottom, COVID bottom, right? And so you see that for the most part, performance, number one, you see for the most part that what we just had happen, the last 2 weeks of a pullback, is akin with the worst periods in the U.S. stock market history. So you're living right now through what is historically some of the worst times that we've ever seen. So congratulations to you if you haven't freaked out yet. There was only one time, by the way, that there were 3 weeks in a row that we lost 5%, and that was leading up to the Black Monday, where the market just died all in one day. Other than that, it's never happened any other time there. Now, if this history is to repeat itself, even in some way, then it would be easy to suggest that right now is a good buying opportunity. So starting last week where I was saying, hey, now's the time, right? You want to start buying in this zone here. You want to go and be more aggressive with your buys. Well, we can look back in history and see any back-to-back losses of 5% was closer to a market bottom than a market top. So really fascinating there if you want to take a look at that. That doesn't mean we can't have a recession, by the way. We can most 100% have a recession. But remember, most of the time when we hit a recession, the stock market is over 2/3 of the way through its downturn. Last week's open house, Wine and Wealth, actually, I shared that with you there. So anyways, here are the actual performances of those that I just showed on the previous charts here. 1974 during the Nixon resignation there, down 6% 1 week, down 5.4 the next week after that. You've got the same going here. You can just see they're all over 5% because that's the data that we were actually referencing there. Now, when I say that the stock market outperforms itself, these are the time periods you have to be in the stock market or you can't have S&P level returns. You have to be in during those nasty snapbacks like we saw 2 weeks ago, 6.6%, all in 5 days. You've got to be a part of that, even if we make new lows. Otherwise, you can't outperform the S&P. And so everybody's, you can't outperform the S&P. You absolutely can, but you can't do it if you're not participating in what happens or what becomes these outperforming weeks. In other words, let's take a look. Here's the average performance going forward over 1 month, 3 months, 6 months, and 1 year. So the blue is after having 5% back-to-back weekly declines there. So we took the average of all of them. And you could see that compared to any normal 1 month performance in the S&P, it gains 0.65%. So we way outperform the normal historical trending of the S&P 500. Take any 1 month, add them all up, and then take the average of the entire, since 1945, which is as far back as we can go. You take all of that and average it out. You say in 1 month, the S&P averages a gain of 0.65%. After periods of 2 weeks where you have loss of 5%, loss of 5%. The 1 month forward performance dwarfs that of the average. In other words, the market outperforms its historical average there. So if we look 3 months out, the average 3-month gain across the entire S&P in any 3-month time period is 2.13%. We're more than double that over when we have these back-to-back declines. Look at how that gets worse and worse, and I should say better and better over 6 months and 1 year. So the long-term investor gets rewarded by outperformance of the S&P when you're able to sit through some of the nastiness that we've seen right now, and in fact, some of the extreme nastiness that you see in the stock market. So no matter what you think, that's why I pointed out it was the Nixon resignation, it was Black Monday, the end of the dot-com bust. I pointed that stuff out to show you that this time is certainly no different. They're calling this the 60-40 collapse, where whether you had 60-40 stocks and bonds, either way, you took a big hit there because bonds actually fell as well. But anyways, this corresponds with the worst times in history. And no, this time is not any different. There is no news or political adversary or whatever you want to say that makes this time any different than all the other times in history. That's why I pointed out there was some really nasty stuff going on during those time periods there. Anyways, that was a long way of basically explaining what's kind of a really cool stat if you're looking at some of the worst periods of time in history.